Hey guys, Anthony Beckham here. Welcome to the channel where real estate is life. Today we're gonna be talking about the lessons that we are not taught in school about money and how if we wanna have success financially, oftentimes we have to go against the word of our teachers, friends, and family to really achieve financial success. So let's not waste any time, let's hop right into it. So first, we gotta stop trading our time for money. For some reason, this is something that they just don't talk about in school. I remember whenever I graduated, I was 18 years old and I was looking for a good job to settle down with, and I ended up getting hired at a local bank. I made like 30 grand a year, I had benefits, there was even a 401k match, and 30 grand a year was about what my parents were making, so I felt like, even as a teenager, I had already made it. And of course, I felt like I was doing good whenever, I was far ahead of many of the kids that I had graduated with. And most importantly, my parents were proud of me. But it wasn't long of working 8+ hour days, 6 days a week to maximize my overtime and sitting in this cubicle for hours every day, all the daylight hours, I started to get depressed. And how couldn't you? And I really just started to think about there has to be a better way. I couldn't imagine being at that same job like my parents had for 20, 30 years at something I was so unhappy doing. I realized that it was gonna be really hard to get ahead financially trading my hours for money because there's only so many hours in the day. So starting with me making $14 an hour, we can do some quick math and see how we quickly hit a ceiling and a cap on what could truly be made with that hourly wage. So with 40 hours a week, that would give me a weekly paycheck of $560. Even with 8 hours of overtime, working that 6th day like I was looking at best case scenario of making $728 a week. Now, if we get extreme with it, there's 168 hours in a week. So even if I worked 16-hour days, 7 days a week, meaning that all I did was work and sleep, that would end up being $2,072 a week, meaning I would literally have to sell my soul to my job to make that coveted 6-figure income that everybody wants. Because working off that 16 hours a day, 7 days a week for a whole year would put you at right around $107,000 for the year. Obviously, that's not realistic, and there's absolutely no way that anybody could pull that off or should want to. That is not even worth the money if you literally have to sell your life trading every hour in the day for money. But luckily, there is a better way. So how do you make good money without selling your soul? You do that through business, sales, and investments, because those are all ways that you can make money dependent on how hard and efficiently and smart you work versus just the hours that you put in. The bottom line is you gotta find a way to quit trading your hours for money, because whenever you're working a job, that's what you're doing, and there's a hard cap on how much you can make. Contrary to popular belief, you don't have to go to college. So from the time that we're old enough to write our name, it seems like our parents, teachers, and entire society is hammering in that we need to go to school for 12 years just to be educated enough to go to college for 4 to 8+ years so that you can get this college degree. This means we're expected to go to school for 20 years, 2 decades before we even start to make money. And then whenever you take into consideration the fact that college students are graduating with an average of $32,731 of debt, it definitely makes you rethink going to college. The top 10% of income earners here in the US are self-employed or own some sort of business. School and college basically teach us how to become highly specialized for a job. But let me tell you, it is a lot harder to become a millionaire working for somebody else than it is for yourself. If we take a few nobodies, for instance, like let's say Bill Gates, Steve Jobs, or Mark Zuckerberg, none of them had college educations, or at least didn't finish their college education. And they all went on to create some mildly successful companies that you might know of, like Microsoft, Apple, or Facebook. Now, there is a time and place for college. I mean, if you want to become a medical professional or a CPA or an engineer, those jobs require that highly specialized education. I mean, if you're going to go in for open heart surgery, you probably want someone that has a good amount of education on how to do that.
Don't worry, little fella, this won't hurt a bit.
And there's absolutely nothing wrong with pursuing one of those careers if that's what you choose to do. A couple of the main takeaways here are, first of all, know what you're going to college for before you start paying to go to college. So many people start going to college just because they're told that it's the right thing to do. And they start putting themselves in this crippling student loan debt for no reason, going and getting an art history major and never using the degree. Begin with the end in mind, and if you're gonna go to college, know what the career is that you're going for before you start. And take as much time as you need to figure that out before you start throwing time and money away. And last of all, don't take out student loans unless you absolutely have to. Do well in school, apply for scholarships, and do your best to not sign on the dotted line for those student loans, even though they may be easy to get. Buy assets, not liabilities. Now, it's gonna be hard. I mean, once you graduate and you get out of school, all your friends are buying fancy cars and cool toys and gadgets, and it's gonna be hard not to wanna fit in with the Joneses. But we want you to buy assets instead of liabilities. Assets are things like real estate, stocks, and investments, things that tend to go up in value. Where liabilities are gonna be things like debt, credit card debt, cars, and other things that tend to go down in value. Now, it's gonna be hard to resist going out and putting yourself in that bad debt. I mean, you can afford that payment on the Tesla, right? But the key here is to wait until your assets are producing enough money that your assets can pay for the fun stuff for you. Or wait until you at least have a business established so that things like Tesla and fun stuff like new computers and phones and eating out are at least all write-offs, so that you're saving money in your taxes and are basically getting a good discount on whatever fun stuff you are buying. I try my hardest to not spend any money unless it's something that I can write off, like our travel or like a vacation or weekend getaway. There's always ways to figure out how you can at least write those expenses off so that you are saving money in the long run. I would say that's the only exception, is once your income gets high enough that you would like to make those purchases, at least make sure that they're business write-offs so that you can save yourself some money and justify splurging a little bit. Next, learn from the right mentors. Only take financial advice from somebody who is in a position that you want to be in. For example, I had this minimum wage job during high school at a local grocery store, and whenever I turned 18 years old, there was this opportunity where I could go over to the oil rigs and basically make $5 grand for a 2-week hitch over there. So of course, I was like, hands down, that's how much I'd make in 5-6 months at the grocery store, making part-time minimum wage. I was gonna quit that job and I was gonna drive to North Dakota to go take advantage of this opportunity. I still remember having that conversation with my dad. You sure that you really want to leave your grocery store job? You've been there a while, you can work your way up. You might be making a mistake by leaving. Luckily, I didn't take the advice to heart and I did quit my job. I went to North Dakota and I made as much money in those 2 weeks over there that I would have in almost 6 months at my grocery store job. I really didn't think very much of it at that time. But the fact of the matter is that my dad was just trying to protect me. He didn't want me to make a mistake. He didn't want me to do something that I was going to regret. Looking back and thinking about it, my dad still works the same job that he did whenever he was a teenager. And I can imagine still working at the grocery store, let alone for decades and decades. And so while there may be many things that I look up to my dad about for advice, maybe career, if he isn't in the same position that I want to be in, maybe in regards to my career, it isn't best to take advice from someone who isn't where I would want to be. Just as you probably wouldn't take relationship advice from someone who's been divorced 5 times, make sure that whoever you're taking your financial and career advice from is someone who you would trade positions with. Of course, I want you to respect the thoughts and ideas and opinions of your friends, family, and teachers, but if they haven't created the success that you're looking for financially or in their careers or really in any other field, make sure that you're seeking out the people who have, whether that's through books, podcasts, or other content, so you can follow the lead of someone who's been there before. Take calculated risks. To make more money and actually have a chance at financial freedom and success financially, we're gonna have to take a different approach than what we're taught in school. It's not gonna be enough for you to just go to work and put some money in a savings account and sprinkle a little bit in your 401k. Unfortunately, that just doesn't work anymore. When we take into consideration inflation and just the fact that costs of goods and services seem to go up year after year, you're gonna have to have a good game plan and a good amount of money invested to actually enjoy retirement or achieve any kind of financial freedom. Even though some people might think of it as risky, I've chose to take the path of real estate to achieve financial freedom and, build up a savings for my retirement. This is done by putting a tenant in a rental that pays down my mortgage every month. I get the tax benefits and a little bit of cash flow on top of all that. If I were too afraid that the real estate market was going to go down and instead I just socked all that money away in a savings account, like maybe some of our teachers and parents have told us to do, then I would not even be close to where I'm at right now. My money would have never had the time to work for me and create hundreds of thousands of dollars in equity that happens in time whenever you place your money in the right investments. So make sure that you're taking those calculated risks along your financial journey, especially in your earlier years once you're out of school and through your 20s, because that's the time that you can really afford to make those risks and make those mistakes. But put your money somewhere now that your money can work for you and you will not regret it. The cost of growing up too fast. So while we're on the subject of taking calculated risks, would you ever make a bet on half of your net worth? Literally half of everything you own, all of your money, and everything that you've worked your entire life for? Well, essentially, that's what you're doing when you get married. You're gambling half of everything you own, because if it doesn't work out, everything is split in two. This is definitely something that they don't talk about in school, but you'll see that many of your friends are gonna get married, start having kids, and that's fine. Maybe you go off and get married too, and there's nothing wrong with that, but you just wanna make sure that you understand the implications if that doesn't work out. Because whenever you look at it from the fact that you're gambling half of everything that you've worked your entire life for, it does kind of put it in a little bit of a different perspective. And if you're just in Vegas and you're drunk for the weekend and, maybe you wouldn't take that risk if you had thought about the possible repercussions. Now, let's go ahead and calculate what it would cost to maybe add a couple kids to the mix. And in most every article, you're gonna see that they're gonna cost you at least $1,000 each every month, and usually right around $250,000 over the course of 18 years. That might be just a little bit of a setback. While getting married and having kids are important experiences to have in life, more or less from a financial perspective, just make sure that you are ready for that. Even just taking my own story into consideration, if I were to think about all the time and dedication that I've had to put into the business over the last handful of years to put myself in a more comfortable financial position, there is no way that I could have done that if I would have started a family right out of school or in my early 20s. I wouldn't have been able to dedicate the amount of time that I would have wanted to seeing my kids grow up, and I would have missed out on a lot of experiences. So again, just make sure that you're taking into consideration whether or not you're ready for those things, and just realize how big of an impact that can have on your life, not only financially. Your family deserves your time and attention. And if you're focused on building your career or building up your financial assets, now may not be the best time to start. So make sure that you're ready to make that kind of commitment. So hopefully you guys are able to apply some of these lessons that we may not have been taught in school and avoid some of the financial pitfalls that we talked about today. So if you like this video, don't forget to hit the like button and subscribe to the channel to follow us on the journey to Real Estate Millionaire. So thank you guys so much for watching, and of course, I will see you on the next one. See ya.